Hello everybody. So today I want to talk about beauty stocks. The reason why I talk about beauty stocks is, on my big spreadsheet where I analyze well over 100 stocks, I pair them with industries. And of course, beauty is one of these industries that is getting disrupted. So there's a lot of high growth stock in that sector. And additionally, that sector is cheap for a reason or another. It's not as understood as a lot of other sectors which tend to be expensive. Like space, for example, is very expensive. Payments is expensive. The beauty sector is very, very cheap, and it's growing fast, and it's getting disrupted, and it's got behemoths, like the L'Oreal or Estee Lauder of the world that are getting disrupted. And it's also a social thing. It's an Instagram thing. There's a demand built in this sector, and so that's why I cover this sector among many other sectors, among dozens of sectors. This is just one of those that I cover, and I like to do comparative differences, right? I compare stocks, against other stocks, because that's how you know the relative value in a way. So let's get started. There's 7 of them I want to talk about today, briefly, very briefly. And the question is, are 4 of them worth of time? Only 4 of them? Well, that's a lot. If it's only 4 of them worth of time, that's a lot. Okay, let's talk about e.l.f. e.l.f. is a stock I've covered a few times on the channel. Can't believe it was more than 6 months ago. I have a few videos from 9 months ago about e.l.f. e.l.f., of course, cratered with the tariff fear. This stock traded down to $49. Can you believe that? $49. And of course, ever since there has been a China trade deal, the stock bounced back up. It's down a little bit. It was close to the 130s. It's down a little bit. Now, of course, the stock dumped. Why did the stock dump? Because 80% of the product that e.l.f. makes, the makeup, 80% is made in China. And of course, there was a lot of uncertainty on the China tariffs. People taking President of the United States literally back on April 2nd, thinking, 128% tariff was here to stay. Turns out it was 2.5 times lower than that. The tariff ends up being, right now, the average one ends up being 51%, so 2.5 times less than feared. This is not a company extinction event for e.l.f. Tariffs are not a company extinction event for e.l.f. The CEO of e.l.f. has guided before that typically with tariffs, the costs are eaten. The media will tell you it's only the consumer who eats the cost. In reality, the supplier who wants to keep selling will bear some of the cost, and you'll have some exchange rate effects, and you'll have the distributor. The distributor will also work a little bit on the margin. And fourth, last but not least, but fourth is you raise prices to the consumer. So it's really 1/4 of the component, 1/4 of the price. And e.l.f. raised their prices by $1, and they had this little campaign on TikTok and on Instagram and all that. They call it tarifying. The tariffs are tarifying. Oh my goodness, what are we doing? They raised the prices by $1 across all products. Keep in mind, this was a company that had dollars like those little makeup pens. They used to be $3, so now they're going to be $4. So that's a 25% increase. They're winning on that. Now the product that used to be $7.99 was $8.99. They're raising a little less, but it seems to me like increasing by $1 really went well. I didn't see any backlash on some social media or anything like that. So I think this company will be able to eat the costs of the tariff. Keep in mind, the gross margin on makeup is insane at 71%. You're essentially repackaging petroleum and coloring it up, and you're selling that for a very high margin. And of course, it's a low cost, right? e.l.f. is a low cost provider of makeup. Women are getting more and more savvy. They realize that they're getting ripped off by L'Oreal or these old brands. They realize that really 95% gross margin is not needed. 70% gross margin is probably just enough, and it's probably just as good. And that's why this company has been growing very fast. Number 1 brand among Gen Z and among Gen Alpha. That's what e.l.f. does. And so I'm bullish on the stock. I own the stock, a smaller position than I would prefer, but I own the stock and I'm bullish on the stock. Moving on to another stock that I'm bullish on and that I own, and it's Oddity Tech. And this one I'm not adding to. I'm not interested in adding to it. I'm disappointed. It went up 80%. too quick, went up too quick, this one. The market is getting excited about their third brand coming. So this stock is well on its way for having e.l.f. makiage. e.l.f. makiage is on its way to being a billion-dollar brand. What is e.l.f. makiage? It's an AI-powered foundation, so they sell it only direct to consumer, only on social media. You go on the website, you scan your face, the face scans your color, and then it creates a foundation that is exactly your skin tone. And it's usually very difficult for women to find the right color, and so once they found a product that has the exact color customized to them, they stick and they reorder. And that's essentially the bulk of the business for Oddity, but they are doing very well with Spoiled Child, which is their second cosmetics product. It's a spray. And they are about to launch a third product, which will be a telehealth platform that's going to focus on skin and body care. So perhaps a little overlaps, perhaps a little competition with Hims here, but we don't know yet. I'm waiting to see what brand free is going to be. What is not for sure, but kind of for sure. At least they've shown that they've been able to scale the first brand, e.l.f. makiage, to $1 billion coming up, hopefully. Then Spoiled Child, they may be able to do the same thing. Then brand free, are they going to be able to do the same thing? And they're also communicating and working on brand 4. So this is a direct-to-consumer beauty company who's able to create standalone brands. So you don't get the synergies of having the same brand, but you also get more diversification. I find that company interesting, trading at a price to sales of a 4.4, so that's not that expensive. EBITDA margin is very close to 20%. Gross margin is super high, 73%. It achieves a rule of 40 with a 44, and it's cheap. EV over GP over RG is a 0.3. So Oddity is an interesting one to me, although I'm not adding to it. I own it. That's enough. Let's talk about stocks that I don't own. I used to own Inmode, but I don't own it. Inmode is what? Inmode is well, it's like a fat melting company. It's you have liposuctions for surgeries, expensive, highly intensive. You have to be put to sleep, etc. So they do an awake version of that with either micro needling, that's for tightening the skin, or with a tube where you can just get the fat out of the skin. So it's considered like a semi-invasive surgery. And this used to be very popular in the early 2020s until interest rates went through the roof and doctors stopped buying these machines. These machines cost around $100,000. Doctors stopped buying them because of interest rates, because interest rates to finance these machines for cosmetics office is close to 14-15%. So this is a company, I covered it a few days ago in my stocks for rate cuts company. This is a company you could see a pickup in the sale of these machines if the interest rates drop. They moved, cost of capital moved from 6 to 7 to 14 to 15. So right now they're in maintenance mode, and that maintenance mode is doing well for them. They're making a bunch of cash. They have a buyback in place. EBITDA margin is 28%, and that 28%, that's your consumables. That's your needling, your micro needling guns, and your fat melting tips, or whatever they're called. It's $100 a pop, and typically the customer has to go 7 or 8 times per procedure. So they make a bunch of money on the consumables, kind of like the printer and cartridge business, except they're not selling a lot of printers right now. They're mostly selling the cartridge, but luckily for them, the cartridge is where they make a bunch of money. They wait and see what's going to happen with the interest rates. Unfortunately, since growth is gone in mode, I don't find interesting anymore, minus 6%. And the rule of 40 is not achieved because growth is gone. Airsculpt, let's talk about another company that I don't find very interesting right now. Airsculpt seems to be, it's the US company that does that. To me, it's head-to-head competition with Inmode. In fact, when I go on their website, Airsculpt compares their product to Inmode's Body Tight product, for example, or etc. Like they compare products against each other, and of course, each claim to have the best product. Per my understanding, it's essentially the same product. This picture comes from Airsculpt. You can see it's a tip, and you do small. You just inject the tip, and you can just get the fat out. That's essentially the product. Difficult business right now because these machines are expensive, and because this may not be the priority right now. But as interest rates drop, as the economy and consumer confidence comes back, I think these companies could make a comeback, but we're not there yet. Moving on to Olaplex. Olaplex used to be a retail favorite. A lot of people asked me back in the day, oh, can you add Olaplex to your spreadsheet? I'm like, sure, I added Olaplex to the spreadsheet. It's a shampoo. There's no other way to say it. It's a shampoo business. It's a hair repair shampoo. Too specific for me, I guess, is what I'm trying to say. That's way too specific. Sure, they have some sort of a patent, and they're able to apparently their shampoo is able to repair damaged hair from like bleaching and all sorts of pollutant, all sorts of things women do when they go to the hair person and they get a color or whatever. It hurts the hair. This is supposed to revitalize the hair and deal with the bones of the hair. Is this really a business that I want to be in, especially when you consider the giants against which you're competing, the marketing giants against which you're competing? Yes, they are patented. That's great, but if somebody wants to copy, they may copy, and then you just have a patent to just turn into very high legal costs if it's any of these 200 to 300 billion dollar consumer company who makes a lot of money selling shampoo like Heads and Shoulders, and I don't know all of the brands. I don't want to be in the shampoo business. Plus, this stock has revenue declining, and so it doesn't look good on any of my spreadsheets. But it's up a little 50% compared to the bottom a few months back. So kudos to them, up 50%. There you go. But that might be just a short-term rebound. Revenue growth is not looking good to me, so I don't like it as much. EBITDA margin is great, though. 25%. That's good. Anyways, moving on to another retail favorite, Honest. And Honest, yeah, it's been in a valley of despair. It's slowly getting out of a valley of despair. EBITDA margin is not there, 1%, so we're not there yet. Rule of 40, well, that's the lowest one I can calculate out of the 7 stocks I talk about today. Revenue growth is 7%, so it is growing. That's better than nothing, but it's not nearly beating the rate of inflation, the rate of monetary inflation, right? It's not beating that at all. It's not giving me my minimum 15%. It's not giving me that. And then you have to look at the product too, and you have to be passionate about the product. The product is mostly baby stuff and baby wipes, and to a lesser extent, it is beauty products. And so this stock was popular because it was founded by an actress called Jessica Alba, famous for some reason. Some people got behind it. But in my view, when I look at the trends again in consumer retail, I have a feeling that cruelty-free, clean conscious formula, in-house toxologist, at least cruelty-free, isn't it half the aisle? Isn't half the aisle in cosmetics or in beauty or in shampoo? Isn't half the aisle cruelty-free? I'm pretty sure these days. I'm pretty sure. Try to go to perhaps some of the fancier stores where Honest would be sold, like the Whole Foods of the world, and I'm pretty sure the differentiation is perhaps not enough for me to get behind. But anyways, I don't have to ask myself that question because the numbers don't look attractive. And of course, the last but not least, the reason why I make this 7 stocks video is EOLS, right? Evolus, EOLS ticker symbol. That's the reason for this whole video, because for the Patreon, I made an entire video. These videos, by the way, eventually I release them on the channel, but I'm trying to like separate single stock analysis from like analysis that are gonna get me a lot of views, because I don't want to hurt the channel. So that's why I cover 7 stocks in this one, and not just one. But I did a full analysis on Evolus, and I find this stock very interesting. You get a glimpse into my process. Why do you think I analyzed Evolus, for example? I analyzed Evolus because as I scroll down through all of the stocks, I find the one stock that I find the cheapest with the highest growth, and then that I haven't analyzed yet. Like, right, of course LifeMD is better than Evolus. Of course HIMSS is better than Evolus. Of course Oscar is better than Evolus. But I've analyzed these stocks before. Evolus is a stock I haven't analyzed before, and out of all of the beauty stocks that I follow, it's the cheapest. So if someone is looking for uncorrelated returns, if someone is looking for a stock that is very, very cheap in that sector, I think this one may be it. Very interesting. They are so of course, one of the big advantages of beauty, didn't say that, but one of the big advantages of beauty is it's all cash pay, right? You have somewhat of a patenting for some of these products. You have FDA approval required, so you have that moty part of healthcare without the annoying part of healthcare, which is insurance reimbursement. Well, guess what? Something like EOLS is never reimbursed by insurance. Botox is not reimbursed by insurance unless you get it for migraine. But anyways, cosmetic Botox is not. Cosmetic Jeuveau is not. They have kind of a number 2 in the anti-wrinkling injection space. They have kind of a number 2, and it's growing quite fast, 32% a year, and it's called Jeuveau, and they have their advertising, and they say, hey, look at us, we're better than Botox. And so typically this is done at beauty clinics, and beauty clinics will typically carry both of them, and then maybe the doctor and the patient decide that they're going to inject Jeuveau in those wrinkles, in those frown lines, and not inject Botox. And so that's your classic disruption story, just a classic disruption story. Of course, the newcomer, the newly FDA-approved wrinkle treatment is always slightly more effective than the former one. 87% of people saw an improvement versus 82%. I didn't look at the pricing, but I would bet you the pricing is at least in line, if not cheaper. But you know, it's not always transparent, the pricing. But I would guess it's slightly cheaper. That's the classic way that FDA-approved products kind of win over new customers, and they're growing fast. And that's their only line of revenue. The new line of revenue, which they're launching in the US in the second half, is this. It's called Evolus. So this is what is called a filler. It's actually very weird to look at. It's I don't know what it is, quite frankly. It looks like plastic, but it's not plastic. It's a form of acid with some sort of compound in it. It's transparent, and you can just inject it in different parts of your face, and you can make things grow. So that's kind of how it works. And so they have Evolus Sculpt. They're going to launch that. Evolus Lips. They're going to launch that. And right now, for Q2, they're focusing on launching Evolus upper lip, essentially. Just the upper lip. That's what they're focusing on right now. I guess that's where people want to see volume the most, or something like that. So that's what we're focusing on right now. But they're FDA approved, and of course their filler, they say, is better. And they have synergies between those two. The numbers, it's something like 70% of people who get their frown lines injected with Botox or Jeuveau, 70% also feel compelled to do fillers, and so that's why they could have another winning product, another blockbuster product. Anyways, the product doesn't matter as much as the valuation. The valuation is cheap. This company is trading at less than 2 times forward revenue. It's trading at less than 3 times forward profit, forward gross profit, 68% gross profit. That's pretty impressive right there. The rule of 40 is a 33, which is very high in my view. The EV over GP over RG is a 0.11. EBITDA is only 1%. But keep in mind, for these companies, when you see an EBITDA like this, you gotta ask yourself, what do I think about my R&D expense? What do I think about my marketing expense? Do I consider my marketing and my R&D expense something that is lost forever? Or do I consider it a reinvestment in the business? Clearly, Evolus launching a new product and having developed a new product has high R&D expense. And so the value of that R&D expense, which is really the delta between gross margin and EBITDA margin, the value of that expense, one has to decide whether they think it's an investment or whether they think it's a loss that is never to be recouped. EBITDA is my favorite proxy for cash flow. but it's a proxy for cash flow. It's not necessarily a proxy for true profitability for me, because a lot of the items that are above EBITDA after gross profit, when I look at them line by line, some of them I consider investment into the future of the company. And that's the trickiness, of course, of judging companies only based on their profits. That's why I typically don't like to use profits on this channel. Anyways, this was a tangent. I'm done with that tangent on accounting. Hopefully you found this interesting. Hopefully. This was not investment advice. This is not financial advice. This is only entertainment on this channel. That's all I do. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.